All right, let's take a look at what should have been one of the most complicated and boring days to trade, the Monday after Thanksgiving here on 11/27, 2023. It's very flat. It's a doji day. It closed flat like this right here. But I want you to notice the strategy we're testing here is looking for breakers and fair value gaps that happen at the high and low of the previous day. Here's the high and low of the previous day marked by these white horizontal lines that come across. This is the flat day that we're studying, looking for trade setups. You can see that it opened and closed at the same price, but it went up over the top of yesterday's high, and it went down below the low of yesterday's low. All right, so we're going to go look at any trade opportunities that may have happened in those areas, the high and lows of the previous day, using the breaker block and fair value gap strategy. Okay, let's take a look at the 5-minute chart first. All right, here's the 5-minute chart. Let's take a look at it. What does a breaker block do? Well, it creates a zigzag pattern where it pushes below levels of liquidity. And here's the opening of the bell. And what's interesting about this is that it came down like this, and then the bell opens. It shoots way up here, takes out that liquidity on the left, comes all the way down, takes out that liquidity on the right, right? And I'm not sure if we can count that pintail that goes up, but then it comes up here, and then here, and then it breaks way up here on this high break. This is an interesting breaker block. Due to the sweeping of the high and lows of both sides, this internal liquidity here, there's sell stops down here, buy stops, opening bell wipes them both out. It's the Monday after Thanksgiving, and we're looking for a way to use the breaker blocks and fair value gaps. You could see a fair value gap was created right here. The first one that was created right here after the displacement, after it went over the top of this real clean, it came back down into that fair value gap and took off. Now you could say there was a fair value gap created here, and then they all don't work, but this one right here was violated, came back down to the original fair value gap though, and took off. Then you get a couple of little ones up here. I don't like to necessarily trade the little ones at the highs of the range because you really want to get them on a discount level. In other words, when this big move took off here, it came back down to about 60% of that move, discounting the price into a fair value gap. When the big moves happen like this, you don't want to necessarily enter a fair value gap at the top of the range. It worked. They would have worked just fine. This little drop here would have worked just fine. But now we're at the high. And now notice, this is all at the low of the previous day. That's what I wanted to point out. This breaker block, fair value gap setup happened after sweeping the lows of liquidity on the previous day. And we get the same thing happening at the high of the day. Now, that's kind of rare that you get a sweep of liquidity on both sides of the previous day, the low and the high. But here's what happens. Let's take a look at what the fair breaker would look like. The breaker block looks like here. It goes up, sweeps liquidity, it comes back down, goes up one more time, and then busts a move down here like this, all right? And that pattern alone creates a fair value gap. Well, where's the fair value gap? Right here in this area right here, right there. All right, now when it comes back up on these couple of candles, it goes right into the fair value gap, and that is where the entry is, right in this area here for the short. Okay, where does this whole thing take place? The breaker and the fair value gap at the high of yesterday, putting in a short reversal pattern, smart money reversal pattern, fair value gap entry, and we're off to the races. Now, there's another one down here, which is interesting. After this huge move down, what does price do? Price comes back 50% of the range right here. Let's take a look at that. Into a fair value gap, right? Let's mark it out. Here's the fair value gap right at the 50% range. And you could short here, or you could see this gigantic move down. Where does it bounce? Right into the range of the fair value gap and goes back up. But we're looking at this right now. This huge move down, we would have saw this breaker, this fair value gap created. It's possible we could have gotten in right here. But the problem with this entry here on the fair value gap, these couple of candles that go up, is that it didn't really pull back 50% of this range. So it's a little risky. But when it goes down here and comes back to the very same fair value gap, we got an end of day opportunity to see if that's going to short down. So this is really interesting on a day like this, a very flat doji day like this, to get such great opportunities at the low and at the high of the previous day, and multiple opportunities at that on the Monday after Thanksgiving. I don't even really have to look at the 1 minute chart, because this is enough right here to tell us everything we need. And sometimes we don't need the 1 minute chart. Sometimes we don't need the 5 minute chart. Sometimes they work good together. But for what I'm seeing right here on the 5 minute chart, it really doesn't matter what the 1 minute chart was doing. These signals and patterns give me everything I need to know to make these trades. Yeah. All right, so we'll see you in the next video. Peace.